Multi-trillion-dollar asset manager Fidelity is all in on Bitcoin. They just published a brand new research paper. It is titled Bitcoin First: Why Investors Need to Consider Bitcoin Separately from Other Digital Assets. This large asset manager made it very clear they believe Bitcoin is something very different than all other 15, 16,000 cryptocurrencies in the digital asset ecosystem. They specifically stated that Bitcoin is a monetary good. It's one of the primary investment theses for Bitcoin as a store of value asset. They think that it's fundamentally different from everything else. There's no other digital asset that's likely to improve upon Bitcoin as a monetary good. And also, any other attempts at an improvement will necessarily face trade-offs. Now, of course, it's not necessarily mutually exclusive between the success of the Bitcoin network and all other digital asset networks. But understanding that things outside of Bitcoin are trying to do something else is an important piece for new investors as they come into the industry. Then they go on to state that non-Bitcoin projects should be evaluated from a different perspective. Bitcoin can be considered an entry point for traditional allocators looking for digital assets, and investors must hold two distinctly separate frameworks for considering investments in Bitcoin and other types of assets. Now, this is a big deal. Why? Because we know that Bitcoin, the trillion-dollar asset, we have a multi-trillion-dollar asset manager that now is going all in and saying, pay attention to this. They then go on to go ahead and compare the various assets of gold, Bitcoin, and fiat currency. They compare these assets across durability, divisibility, fungibility, portability, verifiability, scarceness, and track record. And as you can see right there in the middle, Bitcoin is superior to gold and fiat in every single one of these perspectives, except for track record. So ultimately, Fidelity calling out Bitcoin as a monetary good. Why is it superior to traditional historic monetary goods? And then we have this great quote from their piece. They said the invention of the wheel represented an entirely new technology that once invented could never be reinvented. Similarly, never before in human history had the problem of digital scarcity and a true peer-to-peer electronic cash been solved until Bitcoin was invented. Solving this problem was not merely an incremental improvement, but a leap forward or an unlocking of the puzzle of how digital scarcity could exist. And then they finished up with this great graphic as well, that virtuous cycle or reflexivity of Bitcoin, where basically as Bitcoin continues to get more users and holders, there's higher demand, which equals higher prices, which brings in more miners, which increases the security, which makes Bitcoin more attractive, which brings more users and holders. That reflexivity, as you know from historical financial markets, when you find it, and you're able to actually hold it, it usually turns out pretty well. It's absolutely incredible to see a multi-trillion-dollar asset manager like Fidelity, not only into Bitcoin, which they have been for years, but to be publishing reports like this and so clearly articulating what their thesis is and trying to help other traditional asset allocators on Wall Street and elsewhere go ahead and figure out why they should have exposure to Bitcoin as well.